Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Over the weekend, China released its data and gave hardly any impact on the Australian dollar, which is some surprise. The data that was released showed that Chinese November trade balance posted a surplus of 38.73 billion, missing the target's expectation of 44.5. In dollar terms, imports were up by just 0.3%, but exports plummeted, down by 1.1%. The fourth consecutive monthly decline amid persistent trade war jitters. From a technical point, I still feel that the market is a little bit indecisive in taking the challenge higher and still capped by this level of 68.6080. I do anticipate a move back to the recent low that was stabbed by this dragonfly doji at 68.15. Now a break beneath there would give further scope to the downside to 67.55. However, although we have no data out today, the market will be looking very closely to the RBA Governor Phil Lowry's speech tomorrow, and they will be seeing if the governor holds to his hawkish tone after the RBA rate decision last week, where the statement revealed that the central bank was a little bit more to the hawkish tone. But I still feel any advances will fail. As you can see, we've had at least 3 upside challenges at 111 and hasn't failed to break through for the euro. This week, we've got an explosive data week with the US Federal Reserve, or the FOMC, and the European Central Bank ECB last meeting for its rate decision, which coincides also with the UK general election. Both central banks are expected to keep rates on hold. After cutting rates 3 times last year, the Federal Reserve can sit a little bit more comfortably now after the US non-farm payrolls number crushed the 181,000 forecast and came in at 266,000 jobs in November. A very strong number indeed. And also the previous month was 156. Now, with that being said, I did mention a while back that the GE Motors were on strike, so around 41,000 was added for that number. So overall, still respectively a strong increase, I feel, that for the non-farm payrolls. From the technical outlook, though, we can still see the market has failed to the top side and still at this stage poses a threat to the support level at 110.30. Now, a break beneath there will give further scope to 109.50.70, where I've outlined here, and reassess. There are still, as I mentioned, many uncertainties into this week, especially regarding the 17-month-long trade war. After the White House economic advisor Larry Kudlow said a trade deal with China is close, but warned that President Trump is preparing to walk away if some conditions are not met. He said this in a TV interview over the weekend, and that China and the US are close, though, to a trade deal, and probably even closer than they were in mid-November. Still, the president is not yet ready to sign any deal with China as of yet. If we look at the market here, you can see that from the technical point, we're still pressuring the downside, and therefore dollar yen could see a move to 108.20 or lower to 107.50. Any advances should continue to fail towards a level of 108.90.95 or 109.55.70. Technically, though, we're married to a bearish case, so I'll hold this view. With only a handful of days away for the UK election, I still would rather sit out. But from the break of 130.55 now looks to this level of 131.90 on the weekly chart. If we see a break above here, we could see a rally up to 133, where I've outlined here. But I'd rather not sit or even look at trading to this high risk pair at the moment due to the volatility and the uncertainty. We could even see a bull trap above this level of 131.90, so I'd rather wait for the moment. As you look into the gold market, plummeted on Friday and from the break failed to show any support from the level of around 1,462 and now exposes a region of 1,450, which was the previous and also seen as the bullish foundations. With the uncertainty running into this week, and that is with the Federal Reserve rate decision. We've got also at the end of the week the tariffs that could be applied on the 15th by the US. The market will be on its guard and very much to safe haven demand, and therefore I do feel the 50 level, 1,450, should hold. The rally, now nearly 8% from last week in oil, reaches its target of $59 a barrel. Still holding the view though, but we could still see a rally on towards somewhere a target of 51 to 61, that is, with any pullback likely to be shallow, and support holds at around 80, 35 to 55. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to this new week.